Hi everyone. I'll take up the budget proposal from a direct tax perspective. So firstly, from a individual taxation perspective, there is no change in the income tax rate or nothing with respect to the slabs. Even what was expected with respect to increase in the standard deduction limit or increase in the interest limit for housing loan, etc., nothing has come. Again, one of the significant amendment is with respect to reduction in the surcharge, which has now been capped at 15% on the long-term capital gain on all sort of capital assets. So this is more from a personal tax perspective. Coming to the corporate tax, again, there is no change in the corporate tax rate. But there are several amendments with respect to corporate tax which really affects the companies. First of one is with a welcome change with respect to the tax holiday for manufacturing companies, for the domestic manufacturing companies. So there is a concessional tax regime of 15%, which is available to domestic manufacturing companies who have started the manufacturing of production before 31st March 2023. Now, because of COVID, there was a time gap why people couldn't start the production. So to compensate for that, the government has really increased or the time frame, and now manufacturing companies who have started the production even before 31st March 2024 will be eligible for this particular tax holiday. Again, for the startups, the similar 1 year extension has been granted. So any startup which has started the company before 31st March 2022 was eligible for this particular exemption. Now this has been extended to 31st March 2023. Again, another important amendment is with respect to the tax on digital virtual assets. So this virtual digital assets, popularly known as crypto assets. So again, apart from crypto, there are other assets also mentioned as far as the definition of virtual digital asset is concerned. So this income from virtual digital asset would now be taxed at 30%. There wouldn't be any deduction permitted from this income apart from the cost of acquisition. So cost of acquisition will be allowed as a deduction. If there is any loss on the virtual digital asset, that loss will not be allowed. That loss will also not be allowed to be carried forward or brought forward for subsequent years. Again, the gifts of this virtual digital asset would be taxed, and there is an introduction of a TDS provision at the rate of 1% on virtual digital assets. Another significant amendment is with respect to, this is again not beneficial to the companies. This is for the concessional tax rate of 15% on dividend received by the domestic companies from the foreign companies. So till now, the domestic companies who were receiving dividend from the foreign specified companies were claiming, were paying taxes at 15% as a concessional tax rate, vis-a-vis the domestic companies who were receiving a dividend from another domestic company were paying taxes at the full rate. So now to bring in parity, they have done away with this concessional rate of 15%. So this is not a good change for the companies. Again, they have also made some changes with respect to bonus stripping and dividend stripping, which were earlier applicable to shares and mutual fund units. Now they have brought within the purview the AIF units, REITs, and InvITs. So units of AIF, REIT, InvIT will also be covered under the bonus stripping and dividend stripping rules. Another important amendment is with respect to the updated return of income. So basically, now the taxpayer is given option to file his return of income within 2 years from the assessment, end of the assessment year, after paying some additional taxes. So now this additional taxes, if you are paying, you are able to file this return of income even after 2 years from the end of the assessment year. Now the way it gets calculated is that for the first 12 months, you will have to pay, if you are filing the return of income, belated return of income, then for the first 12 months, you will have to pay 25% of your tax plus interest. And for subsequent 12 months, you will have to pay 50% of your tax and interest. So this option is available. However, they have carved out certain exception wherein even the assessee who is willing to pay additional tax, they cannot file the return of income. Lastly, on the deductibility of the surcharge and cess. So there was a huge controversy with respect to people were claiming this surcharge and cess as an expenses in their return of income in their profit and loss account. Now the government has with this budget proposal, the government has clarified that taxes shall always include surcharge and cess. So thereby meaning that assessee cannot claim surcharge and cess as an expenditure while filing the return of income. So these are the quick sort of proposal from a direct tax perspective. Thank you.